Munger stated that it was insane to teach that one has to diversify when investing in common stocks. And here is a quote from him. And I'm going to ask Nathaniel his thoughts on it. One of the inane things that's taught in modern university education is that a vast diversification is absolutely mandatory in investing in common stocks. That is an insane idea. It's not that easy to have a vast plethora of good opportunities that are easily identified. And if you've only got three, I'd rather be in my best ideas instead of my worst.
Welcome to Critical Thinking Required, hosted by LBW. This podcast is intended for free thinkers, entrepreneurs, and knowledge seekers. Join us as we discuss relevant financial topics, explore with guests their financial journeys, and engage with experts in industries such as space, media and entertainment, real estate, and many more. Buckle up and enjoy the ride.
Welcome to Critical Thinking Required. You're with your host, myself, Tim Bickmore, and my colleague, Nathaniel Leach. And I'm glad I have Nathaniel here today because our topic is going to be surrounded by the Berkshire Hathaway meeting that just happened this week. Sorry.
Oh, you ruined my thumbs up.
Sorry about that. I didn't mean to ruin it. But Berkshire Hathaway did have their meeting. Yes, Warren Buffett was there. Yes, Charlie Munger was there. Surprisingly enough, they are getting older. And they always have good snippets in this meeting. One of our favorite things to do when we would go to Berkshire, we haven't been in the last couple of years due to COVID. And there's actually two things, is A, listening to Charlie Munger and Warren Buffett take questions from the audience is always great because they don't know what's going to be asked. They come up with really good advice. And this usually spurs on some of these conversations that we're going to talk about today. And then also networking there is just awesome. There's so many great people who come to that event. Also wonderful people that we always get to meet and greet, which is fun. So today, though, we want to talk a little bit about three different topics that they brought up. And the first is diversification, their thoughts on diversification. The next is Elon Musk. And then, as Warren and Charlie do so well, life advice. And we just want to talk through it and just kind of talk our own thoughts and opinions on their thoughts and opinions. So that's where we're going to start. And that's why we have Nathaniel here, because he is a big fan of Charlie and Warren. I put Charlie first for him.
Thank you. That is correct.
All right, so let's get started. So we're going to talk about diversification. And what we're talking about for all our audience to know is diversification when it comes to investments. That's what we're specifically going to be talking here, meaning when people talk about diversification, do I have stocks? Do I have bonds? Do I have exposure to alternative investments such as venture capital or private equity? Things like that to diversify, because as stocks go up, maybe bonds go down. As bonds go up, maybe stocks go down. Doesn't always work that way, but that's the overall kind of simple thought process. So with that being said, we have something coming from Munger. Munger stated that it was insane to teach that one has to diversify when investing in common stocks. And here is a quote from him. And I'm going to ask Nathaniel his thoughts on it. One of the inane things that's taught in modern university education is that a vast diversification is absolutely mandatory in investing in common stocks. That is an insane idea. It's not that easy to have a vast plethora of good opportunities that are easily identified. And if you've only got three, I'd rather be in my best ideas instead of my worst. Danny, what do you think about that quote?
I think that the great investors in the past have proved this through and through. Charlie Munger, he had a partnership for a period of time, and he was fine investing in, I think at one point he had 3 stock holdings, and his portfolio was doing a lot of this. And he was totally fine with that. But he said that the problem actually became that his investors, his partners, could not withstand the volatility. In the end, it all worked out. His returns reflected the thesis in that he was proved out correctly, and he actually beat the market during that time. Buffett also practices it to this day. If you look at his portfolio of stock holdings, it comprises, his largest holdings comprise anywhere, depends on the time, comprises about 60 to 80%. And this is between principally 5 to 6 holdings at any one point in time. And then the remainder are much smaller positions, typically positions that are either controlled by his lieutenants, Ted and Todd, and then the portfolios that they manage, and then also just small holdings where they're perhaps just learning about businesses that they've just invested in, and then with time those might increase in weighting as time goes on.
I agree with Nathaniel that concentration can create generational wealth. It can create abundance of wealth. Where I think that the nuance comes, right, because it's always simple ideas, but then there's always nuance behind said ideas, is that Warren and Charlie are doing very good due diligence on which they're placing their bets. Mm-hmm. They're feeling very comfortable with these companies, and they're also willing to hold it for life. They're willing to have the stock market shut down, no more prices come out, and they would still hold this company for 10 to 20 to 50 years, right? Mm-hmm. They have a long-term mindset on that investment. Yep. For the general public, people typically don't have the acumen and or the time frame to kind of invest in that type of way, where diversification can help, mitigate some of that potential risk. In addition, which is also interesting with this concept of diversification, is that if you do look at people who have been successful, typically they are quite concentrated. I always like to use LeBron James as a good example. Some of the quotes that has always come out with, as LeBron has said, basketball, basketball, basketball. Basketball is his tree trunk. It is what he is good at, is what he will maximize, which we'll talk about in a minute. And that has allowed him to diversify from what he has made, but he would never forgets that basketball is what makes him money. That is where he's concentrated. You could look at, for example, Bill Gates. Elon Musk has done it to a certain degree. These people are very highly concentrated in what they do. You could even look at locally in Madison, Wisconsin, Judy Volkner, who owns Epic, is very concentrated, probably within Epic Enterprises, right? So that type of strategy can create a redwood and not a bush, right? It creates us a line up instead of being overly diversified, not being focused on what you're trying to achieve, which is also an interesting point. Mm-hmm. Should we jump to the next one?
Please.
This has to do with diversification, but it gets a little bit more into what Nathaniel likes to call circle of competence. So
I didn't call it that. Just to be clear.
It's not Nathaniel's point.
It's not I can't take credit.
That is a good point. So how to make sure that your idea is indeed best circle of competence. And that's what I was kind of mentioning about, that they have the acumen and they stay in a very small circle. So his quote is, "We're not so smart, but we kind of know where the edge of our smartness is. That is a very important part of practical intelligence. If you know the edge of your own ability pretty well, you should ignore most of the notions of our experts about what I call diversification of portfolios." So Thani, give us your thoughts on circle of competence.
This is a concept that I love, and that every day I have to remind myself of it and to practice it, because it's really hard to practice in real life. In theory, it's really easy, but in practice, it's really hard. And what they bring up is a very simple concept of, this is my line in the sand. I can get up to this line in the sand as close as I want, but don't step outside of that line of the sand. That's exactly what he's talking about. Now, that line in the sand can move as time goes on, as your wealth of knowledge compounds. So your circle, your line in the sand, it grows. Imagine it's more like a circle of sand. And then it just grows with time as you learn and learn. So you find something that you know and understand well, and you focus on it with intensity. You learn about it. And then as time goes on, you begin to understand that there's connections that you're making, what Charlie Munger calls a lattice work of mental models. That's simply saying that as time goes on, you are connecting the dots as you learn. So then your circle grows with time. That's what I really love about that concept, because my niche might be in real estate, for example. And then with time, I'm going to probably get a very good understanding of all of the industries that comprise the real estate industry, that are affiliated to the real estate industry: construction, heating and air conditioning, lending, banking, insurance, electrician, like utilities. I can get a better understanding of those things with time as I continue to focus on my core, which is real estate in this particular example. Tim?
And what I like about what Nathaniel's talking about is, it's that expansion of your circle, and this idea of the lattice work of mental models, right? To be able to start learning more about different subjects, which then can enhance your core competency and expand that circle. That is a very powerful thing. But what I also like is that you always then come back to your core. You may expand your knowledge, but then it enhances your core, and that allows you to essentially optimize your core, right? You just get stronger and stronger as time goes, but it takes time, it takes patience, and I think it takes a willingness to step outside of your circle to learn. But that doesn't mean you need to invest when you go into that outside.
Correct.
But you can still learn about other things, and as you get comfortable, that's when you can say, hey, the fruits of my labor from my core has created an opportunity to now take a next step to invest in this potential expansion of my sand in the circle. And it works itself over time. I think that Warren Buffett and Charlie Munger sometimes get criticized for not investing in technology, for example. That's a great one, right? But what did, Berkshire buy in their portfolio? Apple. It's not because it's technology, it's because it's what technology is in a business model and what they feel comfortable with. And Apple had earned its right to feel that they felt they knew it well enough to invest. They're not anti-technology. They are just anti those business models on how they want to approach the world. But guess what? They still invested in it. People think they're completely never going to touch it with a 10-foot pole. It's not the case. Same with the railroads. Buffett wasn't in the railroads very early on. Correct? Am I correct on that?
That's correct, but it wasn't because he didn't understand them. It was because of consolidation.
Correct. And then eventually he invested in it.
When it made sense. Yes.
Exactly. That's my point, right? Is that you can still expand and then things can change and you can still get into it.
Actually, if I may, that's a very important point that I'd like to hit on, is that.
All right. The next topic they talked about in Berkshire was Elon Musk, which is quite interesting. I'm surprised Elon came up. I wonder if someone asked about that
they always do,
on the side.
Yeah.
So I'm going to read a little bit of what was kind of going on. And so based off of the, question here, Warren called Elon a brilliant guy who had a much different approach in dreaming about the future than the Berkshire executives, right? So Elon is definitely going out there. He's doing big things. Warren and Charlie like to say they like to sit on their butts and do nothing. Elon's not doing that. I can tell you right now. He was on an interview and he was sleeping in Twitter, right? That is not what Warren and Charlie do. He also has often said it takes a hands-on approach to managing Berkshire subsidiaries. He does not take a hands-on approach, which range from the insurer Geico to restaurant Dairy Queen. And Mr. Musk is known for weighing in on the details of his companies. So Munger said of Musk likes taking on impossible jobs and doing it, and may sometimes overestimate himself. Charlie's direct quote was, Warren and I are looking for the easy job we can identify. So essentially they were saying Elon's doing a great job. He's a brilliant person, but he's just doing it differently than what they would want to do. And so I'm curious, Nathaniel, on your point of view of this idea of you have two billionaires in the world, right? You have Warren Buffett, Charlie Munger, and Elon Musk, and they have both been successful via a monetary standpoint, but they've gone about their ways very differently. So how do you feel about Elon versus Warren? And what do you think is right and what do you think is wrong, or what do you think about it?
Everybody has their own approach to how they want to approach life. Everybody has their own set of principles. I'm probably more in the Warren and Charlie Munger camp, in that if I can find great, talented leaders to run companies that I invest in, then that's an easy question.
Is that mailbox money?
Mailbox money, yes. It's exactly what it is. It's, here, I'll give you money, you run this business for me, and then you send me the proceeds. What genius wouldn't like that? But then I can also see from Elon Musk's perspective, where he is, I think, an ambitious individual. He is clearly done well. He's clearly succeeded in life. He's one of the richest people in the world. And he clearly has aspirations that he hasn't even touched upon. Mars being an example of that. I just wouldn't want to be in his shoes, personally. That's not how I would want to run my business if I was in that position. I think that by spending so much time in the details as he tends to do, that that could perhaps take away the journey for someone who could be running that shop on behalf of Elon. So you're taking away from people rising up and doing something with their own lives. And simultaneously, I would view that Elon is holding himself back by miring himself in the details, because he is then unable to go do perhaps other things that he may say that he wants to do, but then he's mired down in these details, which maybe he just loves being in the details. But then is he recognizing that opportunity cost of what he's giving up? Maybe he does. Maybe he doesn't. I don't know.
It's really interesting, actually. I like your point of view on that. I really like the point of holding yourself back and holding others back by being in the details, which is really interesting. I mean, I guess you could make the argument that Warren's held everyone back for how many years, not allowing them to, participate in his little world. But he does allow his businesses to operate and run. And I think that it seems to be in Berkshire, a lot of complaints from the businesses that they get bought by, like Berkshire buys these businesses, is that they're expecting more input from Warren and he doesn't give it.
He doesn't give it because why screw with the good thing?
Yeah,
why break something that isn't broken?
But I mean, I would be the person like, I want to get more info. And he's like, no, you're good. Just do you, which would be a compliment and also scary all in the same breath.
Right.
Because I feel like you'd probably get the whip down if you weren't, performing in his expectations. Maybe I could be wrong.
He has put the whip down in some situations.
Yeah. And Charlie is very similar in that manner and how they work. And I think that I would, I'm thinking about this question from like a financial planning is like, I would have Warren as a client and Charlie as a client, and then Elon Musk as a client from a planning perspective. Oof. And you have two different people that have, again, been very successful, but going about it in different ways. And I think Nathaniel kind of pointed out that it's values. What Warren and Charlie value is just different than what Elon values. And it's not right or wrong. Mm-hmm. It's just different. Mm-hmm. And they're okay. And what I admire about Elon and what I admire about both Warren and Charlie is they don't waver from what they value. And it may not be something that I value, mm-hmm. but that's okay. But they're just like, this is who we are and this is what I want to be. And I think Elon does embody that to a certain degree of, he doesn't really care what the public says. He's just going to do him. Like, he wants to go to Mars and he wants to solve these big problems. And that probably fulfills him in a way that Warren's like, I have no interest in that. But what's interesting is they've both been successful. They've mm-hmm. both been good at what they do, and they probably have lived a fulfilling life based off of what they want. And I think that is an important note in all of that, is that you don't have to be your neighbor. Mm-hmm. You don't have to do what other people do. What's really important is what do you want and how do you then maximize your values, right? That's how I would really look at the two. And I think it's kind of sad that we have to pin people against each other like that and be like, oh, well, this is what, Elon does. And Warren's too old. The Bitcoin conference, which is crazy, they put up, I guess, like Peter Thiel put up a picture of Warren Buffett, and he's old stuff. And then COVID happened, the collapse of cryptocurrency, and he did really, really well in those years. And it's like, he just goes about it differently. And he's shown over how many years that he knows what he's doing. He's competent. And Elon has done the same. Mm-hmm. You can't argue his track record. He may have gone about it differently, but he's been successful as whatever, if he's sleeping at Twitter and doing whatever he wants to do, but mm-hmm. he has shown that he has his circle of competence as well. Mm-hmm. It's just different. So it's important for people just to recognize that. That's really what I would have on that specifically, I guess.
I think that's a nice segue into our next
life advice.
Yep.
All right, life advice. We got two different quotes. Should I just start with the first quote and then go to the second? I think we should probably start with the first.
Yeah,
this one's deep. Mm-hmm. So life advice from Warren Buffett. And I think he said this a few times. I believe Charlie has as well.
In a different, yeah.
You should write your obituary and figure out how to live up to it. That's a deep one. Anyone let you go first?
Simple but sweet. Charlie Munger said something similar, where he has been known to say, I want to know where I'm going to die, so I never go there. I actually like that one. That's funny. It's a very similar concept, in my opinion, in that it applied in a different way. But the main gist of it is, which I really appreciate about it, is that if you have an idea of the type of person that you want to be, then gravitate towards it and figure out how you want to get from point A to point B, because life is nothing but a huge smorgasbord of iterations, of small little changes that you just gradually get older and older and older, and then you're there. I'm sure that Tim could go really hardcore into financial planning about how we see something similar. It's just those little iterations, those small steps that it takes to get to where you want to go.
Yeah, I mean, Nathaniel's right. Where I would take this quote and how it is that if one were to truly do what he said, write your obituary and figure out how to live up to it, meaning, what do you want people to say about you? Do you want your obituary to be like, Tim was the worst person on this earth and we're glad he's dead, right? Is that what's in my obituary? Or it was a room full of people? And what that does is it creates your value base, right? It starts having you contemplate and conceptualize who you want to be. And if you can do that, then that can set a track of how you make decisions. Because like we just mentioned before, right? People just do different things differently. They value things differently. And if you can understand what you value, that's how you maximize your life. That's how you maximize your dollar. That's how you maximize everything. Now, there's obviously different constraints when it comes to different pieces, monetarily speaking, life events you're not expecting that you have to go and experience. But it helps you guide yourself into decision making. And those decisions then can help with being, quote unquote, successful based off of what you value. I think actually, funny enough, Giannis, who plays for the Milwaukee Bucks recently, he talked about failure, right? And it was a very good speech. He came out after the Bucks had lost the series, and a reporter asked, is this a failure? They were number one in their conference, number one in the league, I believe, and they lost to an 8 seed. I think it's one of the first times it's happened in the NBA playoffs. So to everybody, that's a failure. You failed. And he came out and he asked the reporter, did you get a raise this year? Did you get a promotion this year? And he's like, did you fail this year then? Because the reporter said no. And then he started talking about Michael Jordan and how he failed. And he's like, this wasn't a failure. This was still a successful season. We just didn't reach our potential, right? And I think the reason why I bring that up specifically to this is I think Giannis has a very certain value base that he's trying to promote, and how he's going to handle that reporter, how he's going to talk about it. You could tell he was itching just to probably sound off, and he didn't. Took a step back. He's like, I don't want to make this personal, right? He's trying to think about those things, making those decisions in the time, which then helps create character, helps create a lot of things. So if you can then say, hey, what do I want in my obituary? It allows you to think forward to then work backwards to then how you're going to react in certain decisions and what kind of, what you're going to make. So I think it's a really interesting exercise that probably everyone should do conceptually, and probably do it multiple times because things can change. All right. Last quote we have, and we can end this podcast, Annie. Charlie Munger said this. It's so simple. You spend less than you earn. Invest shrewdly. Avoid toxic people and toxic activities. Try to keep learning all your life, and do a lot of deferred gratification. If you do all of those things, you're almost certain to succeed.
It's not rocket science. It really isn't. Every successful investment, people who are small business owners and have succeeded and become very wealthy and then give away all their money, whatever they do with it, it's very simple. It just takes a few core principles or investment factors. If you're looking at it from an investment perspective, it just takes a few core factors that when everything links up together, you have what's called a Lollapalooza effect, also from Charlie Munger. And it's a very simple concept that if you just put these things together in a mass that works well together, and then you just let it run, you will succeed. This is a very similar concept. You spend less than you earn. You invest your money shrewdly. You avoid toxic people and toxic activities. You really try to keep learning throughout your life, never stop learning. And then you just try to defer gratification for as long as you can so that you can then not have to worry about money sometime in the future, money or lack of love or whatever would be the case.
I mean, I think that I'm a big believer that all simple statements come with a lot of nuance and come with a lot of understanding. So I'm going to pick it apart a little bit because that's just how I work, right? So I think even from the standpoint is you spend less than you earn. Not everybody has the ability to do that, right? It just depends on what they earn and what their family situation is and their situation in general. And I think that it's easy to state, spend less than you earn. Some people don't have that capacity, but that's okay at the moment, right? Things can change. Income can change, expenses can change, and being aware of it, right? You have to create a balance. There has to be a balance. Yes. And it's an awareness of what's going on, an awareness of where you may be, right? That is extremely important. There is some nuance to it. I think also spending less than you earn. I think that is really probably generated towards people that do have the capacity and maybe do spend a little too much relative to their earnings. What is hard about that is there's a lot of noise in society, and society pushes us to spend.
Right? The Joneses concept.
Keeping up with the Joneses, it's hard. And that is a difficult thing, depending on where you live, depending on your family situation, your spouse's situation, your friends, right? You may want to be going out with your friends and they're spending all this money and you want to participate. That's not easy. I think people think it's easy because it's like, oh, I just won't spend it. But it's not about spending money. It's about where you're going to hang out. It's about being a part of something, right? Being a part of a community. There's more to it. Now, you could then go into investing shrewdly. Yes, but most people don't have the time or acumen to do that, right? It's difficult. It's not an easy task. There's a lot of knowledge that you have to learn. That means you have to find people that you trust, that you're willing to, that can also invest shrewdly on your behalf, right? Not everyone is not Warren Buffett, Charlie Munger, or Nathaniel Leach. Like, you really need to probably trust somebody, which I'm going to get to my main point. It's important. There's nuance there. Seems simple, but it's not as simple as it states. Avoiding toxic people and toxic activities. Also not easy. Sometimes you grow up with friends.
I got it easy.
Nathaniel's got it easy. Sometimes you grow up with friends that maybe you are been friends for a long time. It's hard to just get away from those situations. Maybe it's family members. Maybe it's somebody that's really close that's a family friend. Who knows, right? That's also can be very difficult. You have to be aware of it. You have to then make intention to kind of start making different moves. Try to learn all your life. To me, that's pretty easy. I like to do it. That's pretty straightforward. Deferred gratification. Deferred gratification specifically, there is nuance there. You have to have a balance. I've watched too many times where people defer their gratification and then they pass. And then they never got to get to gratification. But I've also seen people who have indulged and then struggled on the other end, right? There is a balance when it comes to deferred gratification. Even Warren Buffett talked about it in one of his meetings that I loved. Specifically, though, that is difficult. Now, and why I go into all of those points, right? This is my financial planning hat. It's going back to the obituary. If you write an obituary and you know what you want it to say, it creates those values. Those values then come back, and then you can start making these decisions. Do I want to spend this money? Do I value it? Does it make sense? Do I want to spend time with these people? How do I value it? But that's self-reflective. That's being aware of yourself, and then to be able to be intentional about the decisions that you're making, right? So it all kind of comes forward and back and forth with, if you can be self-aware, if you can do self-reflection, that will help you be able to abide by these simple statements. But to be self-aware and I self-identify is not always that easy. It takes work and it takes time. It's difficult. So that's how I come back, is like, I like the statements, sound simple, but there's a lot of work to it. And with anything, a lot of work comes typically with success. So that's my point on that one.
It does take a lot of work. Yeah, I concur with that.
So that is what we got. Dan, do you have anything you want to wrap up with on our points with Charlie and Warren here?
They give a lot of good advice, and it just takes time for that advice to be executed appropriately. And you gotta stay on it.
You have to stay on it.
Life is a bunch of little iterations that are thrown at you. and you have to pivot.
Yep. And I think that it helps with the iterations if you have those values that you want to instill and be intentional about the decisions you're making on those iterations. And sometimes life goes so fast that you're not, trying to be intentional to. So it's a bigger decision, a bigger pitch. Got to take a step back, really understand what's going on to make sure that it makes sense. And I do agree with Nathaniel from a financial planning perspective. It's iterative decisions over time that make up the plan. It's not the plan that makes up the plan. And so you have to dial it down into those decision makings, which some of these concepts can really help from a framework to help you think through what's going on going forward.
I borrowed that from him.
Yeah.
Financial planning concept. That's all him.
I might probably got that from somewhere at some point. But we really appreciate everybody. Hopefully you guys liked our input on their input. And, we are very big believers in Warren and Charlie and what they talk about because it is really good. So thank you so much for everyone for listening, and we will talk to you soon.
Bye.
Like and subscribe.
Thank you for taking the time to start your journey of thinking differently and listening to LBW talk about stuff they love. Until next time.